Very warm welcome back on Business Today Television. As is the beginning of the first day of the week, there is a lot of happiness in Dalal Street as far as this tweak in GST rates is concerned, this upgrade of India's rating by S&P is concerned, and of course the overhang of the extra punitive 25% tariff on Indian merchandise exports by the US for the moment is not happening. Therefore, you see the Nifty now 295 points higher at 24,927. Remember, the day's high was somewhere like 25,000, where a lot of option writing came in, and therefore the Nifty slipped, but that's just a bit. There is widespread rally across Dalal Street. Look at the Nifty Auto Index. This is the top performing index as of now, up 4.5%, and what you see in front of you as far as the Nifty Auto Index is concerned, highest since October of 2024. The reason being that products such as four-wheelers, commercial vehicles, two-wheelers attract a GST tag of 28%. There is buzz in the market that this will be reduced to 28%, given the it will be reduced to 18%, given the promise that the government has made. And therefore, you look at Maruti, a fresh record high on the stock. Remember, small car sales were already stagnating, and you have a very sharp move coming onto Maruti as far as the counter is concerned. About 8.5% higher, breached the 14,000 rupee mark, and hold your breath. 2,400 crores worth of Maruti Suzuki has been traded. The top three counters in the market are today in terms of volumes. Hero Motors 5.75% up at 1671 crores worth of Hero Motors has been traded, and of course M&M 4.5% higher at 3412. M&M is the rural play as far as SUVs are concerned. In any case, M&M, if you see over the last 5 years, is Nifty's top performing stock, and today you see a very strong move coming into M&M as well. Record highs are seen on Maruti 14,041, Ashok Leyland 8% higher, commercial vehicle maker 131, fresh high. Hyundai, again a small car maker primarily, 2,406, TVS Motors and M&M. We have to pay attention to two-wheelers for two specific purposes. A very good monsoon that puts a lot of money in the rural pockets, and of course the festival season upon us via Diwali, via Dashera, via Navratre, via Ganesh Chaturthi. So that's the reason why you see two-wheeler stocks, four-wheeler stocks with a rural focus, as well as small car makers and commercial vehicle makers, all at record highs. We'll be welcoming Mr. Arun Kejriwal on the show. Mr. Kejriwal just wrote last Thursday that the worst seems to be priced in, and the timing couldn't have been better. Namaste Arunji, and a very warm welcome. Apparently, the buzz in Delhi is that Mr. Modi read your article and then went for the GST tweak. He said all bad news is now priced in, now let me give the good news. How do you react?
I am humbled by what you said, but let's put it in a more proper perspective, Shell. But before that, good afternoon to you and all your viewers. The important thing to understand is that Trump is not behaving too nicely with either India or with Modi ji. Irrespective of that, this is India's way of saying we'll live to fight another day and we'll emerge stronger from whatever has happened as far as Trump is concerned. Please also remember that there are two bonanzas that have already been announced and would be available very shortly when the festive season starts.
Ji.
The first is the pay commission amount of money that would get distributed to central government employees. The second is the CRR cut that
जी
RBI had announced, 25 basis points, which total 100 basis points. So the system will be flush with money.
करेक्ट
What was lacking is the demand, the consumption. Now you have the money, you have the liquidity, and we have this GST bonanza,
करेक्ट
which, let's keep our fingers crossed, gets cleared by the GST Council. If all of this happens, irrespective of whether Zelensky, European Union, and Trump come to a settlement today, tomorrow, in the ensuing fortnight, it's all triggers, all cylinders fired for India. We are rising to the occasion and showing to the world that we mean business. It's not the same India of 30, 40, 50 years ago, where at one point of time, when I was much younger and smaller, we used to import food grains under the PN 480 scheme.
जी सर जी So, there is a string of positives that's come in over the last 6 months via the RBI rate cut, the income tax benefits provided in the budget, followed by this GST bonanza, and of course the ratings upgrade by S&P. Arunji, given all these 4 or 5 things that have happened, plus a good monsoon, do you think Indian markets should be re-rated now? And if yes, what would you think to be a good value of the Nifty, say by December?
So your question is a bit loaded, Shell, but let's look at the basic things that you are asking. Your simple question is there value in buying the Nifty or the Nifty constituents? The simple answer is yes. What has been disappointing so far is the fact that the growth that was expected from the Nifty stocks haven't come out as well in the June quarter as was expected. Fair enough, consumption has let us down, and that consumption could now be triggered with this GST rate rejig. I believe this is at the right time, at the right opportunity, and hopefully the opposition ruled states will also understand why it is being done. It's not necessarily a revenue sacrifice, but if there is higher consumption, it more than makes up. In any case, half the money collected flows into the individual state from where it is generated. One other point, the sin tax that is being talked about and the usual culprits, victims, or the people that are involved with this, your tobacco, cigarettes, gutka, pan masala, and so on and so forth,
Ji.
40%, it doesn't make a difference to companies' profits. It doesn't make a difference to companies' revenues. And we all know that a cigarette smoker will pay more and will still continue to consume the same number of cigarettes if it gets pricier.
Arunji, the issue is with this rate cut now a near certainty in GST pricing. What do you think should equity strategists such as you do in terms of allocating fresh money? Do you think household incomes will get a relief there for FMCG and maybe brown goods makers? Look at how Blue Star, Voltas, AC makers are doing today. Look at how four-wheelers are doing. Two-wheelers are in top shape. Is the cut already priced in, or do we see further gains from here?
So, two ways of looking at that as well, Shell. There is need to wait for clarity. It could be as much as 15 days away. One needs to, you know, hold on, not jump the gun. What needed, what happened, what has happened is all factored in. It's good for a start. Good rains in Bombay since the last 2 days are also adding to the momentum.
Yes, correct.
But if you were to ask me a pointed question, am I going to put in new money today? Not at this rally which has happened, where
Okay.
we still see the Sensex 800 points higher. We still have uncertainty on the Trump tariff front. Uh, with some of these things yet to be completed, sorted out, I would hold on to my horses. Maybe I have to buy a percent or 2% higher, but it is better to be sure than wishy-washy.
Okay.
First part. Second part, second part, Shell.
Yeah.
Uh, I would also like to relook at some of the stocks in the portfolio because once the tariff is also done away with, in whatever way it happens, maybe reducing the penalty 25 and sticking to the 25 or lowering that to 20, you would find new opportunities emerging with our trade pacts with other countries.
Okay.
And final point, Shell, the coming together of China, Russia, and India willing to shed covertly, overtly its non aligned status, which it had done for so many years, could be cause for America, worry for America, and not for India.
Okay. That's an interesting thought. But Arunji, coming back to your earlier part of this answer, that you would rather be safe and not invest the full amount at this point of time and wait for more clarity to emerge on tariffs, probably. But even if you were to invest 5% of fresh funds, where would they go?
So you have to now look at the India consumption story being the driver. That is where you will see the opportunity simply because, like I said, we already have RBI who's done their job. We've had rate cuts. We are having CRR cuts coming up. We have liquidity in the system. The GST will give that added impetus to buy, consume, spend money. And I'm sure corporate Inc. is also willing to let go of some incentives in getting this momentum as far as sales is concerned.
Okay, okay. One thing, Arunji, is again absent in this corporate setup is the strength in earnings. 4-5% uptick in Q1, and before this rate cut happened, there was disappointment all around. Do you expect this rate cut plus whatever positives that you mentioned will now boost at least Q3 earnings?
I think this is the last chance for
Yes.
India Inc. to perform. It's about 9 or 10 quarters that we have been waiting for that elusive growth story that we have all been talking about. And I'm tempted to use a phrase, the Scarlet Pimpernel, which is always chased, but you are never able to catch it. So India Inc. is also behaving like that. We are just not able to get that growth momentum going. I believe we have now everything that could be expected and more that has been given. It's now or never for India Inc. Uh, in case we are able to catch the favorable tailwinds and make the best of this opportunity, it should be good going for the entire sector, each of these sectors that have been given some boost or the other through this GST rejig that we are talking about.
Yes, I do believe that the ball has been in the court of corporate India, and they need to really do something in terms of pump priming their own businesses. The government on its part has done all that it can. It's not stopped pump priming the economy by its capex spend. Well, let's see how it goes. But at this stage, where would you bet your money? Large caps, mid caps, small caps? Where does it go?
So I believe safety lies in large cap simply because even today on a day when the markets are up sharply, over 1% that they are up, you still find those red areas as far as the mid cap, small cap is concerned. Probably they seem to have slipped up somewhere in the last couple of weeks. So it's a little difficult. I'm not saying that you haven't had some outlier results coming in from the mid cap and small cap,
Correct.
but for every one outstanding result, you would have at least 20, 25 disappointing results. So with that kind of a strike ratio, I believe safety is paramount because when you are now doing bottom fishing, looking for growth, you don't want disappointment right at the start of a new investment spree.
Okay, fair point. And at this point of time, Arunji, this ratings upgrade also comes after a gap of 18 years by S&P. At this stage, do you think it's good news for finance companies who borrow overseas? Do you see more FII debt money coming in? How do you think this ratings upgrade will be beneficial for corporate India?
So, as far as the impact is concerned, it's positive. On FII money coming in through the debt, I believe people will be waiting for what the Fed does as far as rate cuts are concerned, and also for RBI's next policy, whether there is any further rate cut or not, before we see that shift of money. Uh, One other point we need to say, while quite a few brokerage houses, international in nature, have started talking of India being a great opportunity to invest, the fact of the pudding still lies in the fact that FPIs continue to be net sellers.
Yes, yes, yes,
So
absolutely.
it's a harsh reality, but somehow or the other, the optimism that brokerage houses are showing is not reflected in action from FPIs.
Uh, I think you mentioned a great leveler. Today's FI number will be closely watched. We've seen since the morning that Nifty is maintaining that 300 point uptick, and maybe the last half an hour you will see more gains coming in. What will be interesting to watch will be today's FIN number, especially on large caps. Let's see how it goes, and we have our fingers crossed. A lot of positives emerging in the markets, ladies and gentlemen. Let's hope that this Diwali is far better than what it was last year, and that half two is better than half one for not only corporate India but for markets as well. Arunji, as always, thank you so much. And I am sure, as I was saying in the beginning of the conversation, it was your article that kick-started the GST cut and this incipient rally on the Lal Street. Thank you for your time, sir.
Thank you. Thank you.
That, ladies and gentlemen, was Mr. Kejriwal, still cautious as ever. He wants that one little niggle, the rate cut, the tariffs on the US India ongoing battle for exports to be sorted out, and then only would he be deploying fresh funds on a gusto. But so far, the climate improves for the better as far as the Lal Street is concerned. We'll be back at 3 with the last half an hour wheel. I'm leaving the Nifty 300 points higher for you, the Bank Nifty 465 points higher for you, and the auto index in top form up 4.6%. Have a nice day. Ladies and gentlemen, a very warm and a very fantastic welcome on Business Today Television on this very fine Monday morning, where you have gains and record highs all across the Lal Street. The reasons are fairly simple to guess.